Securitize is a full company.
Yes.
It's really a technology platform that enables asset managers to tokenize their funds to reach a new audience of crypto native institutional investors. Putting Bitcoin in an ETF to me was kind of funny. It was like training wheels on a Ferrari. You know, like, why do we need this? If I could just wrap up some SpaceX into an SPV and then tokenize it and then offer it to investors, it opens a whole new audience of investors that can now own a piece of SpaceX, where before that was like CalPERS and a few pension funds.
That's the power of SPVs.
When I came into the digital asset ecosystem, crypto and the like, I just saw alpha everywhere, like literally alpha donors all over the place.
Ladies and gentlemen, we're here at the Digital Fusion Summit in Dallas, Texas at the W Hotel. To the right of me, I have Eric Ervin, the CEO of Securitize for Advisors, the same Securitize that has tokenized, I want to say nearly $1 billion in treasuries. Also, I read a recent LinkedIn post. You guys are generating massive amounts of dividends for those investors.
Yeah, that's right.
Would you mind talking about what Securitize is up to, particularly for the RIA, institutional-facing division?
Yeah, so Securitize is a full company.
Yes.
It's really a technology platform that enables asset managers to tokenize their funds to reach a new audience of crypto native institutional investors. So that's what we did with BlackRock. That's what we've done with KKR, Hamilton Lane, a lot of those products. Securitize for Advisors, which is the business that I also run, is really designed to go the other way. So to bring the crypto audience or the crypto investments to the financial advisor community. So how does a financial advisor buy, say, Bitcoin, Ethereum, Solana, like a whole portfolio, dollar cost average, tax loss harvest, do all of those things? They can't just do that in an ETF. They have to go direct and own those assets directly. That's what OnRamp does. So OnRamp, or Securitize for Advisors now, the previous name of the company was OnRamp. So that's what we do for advisors. We let them bill on it with all of those different tools.
How is that engagement with these new ETF products for individuals that want access into this space, but don't want to hold the assets themselves?
Yeah, it's funny. So I came from the ETF industry. I built an ETF company. And so I love the ETFs. The ETF is probably one of the biggest innovations in financial services since the mutual fund invention in the 20s. But at the end of the day, putting Bitcoin in an ETF to me was kind of funny. It was like training wheels on a Ferrari. You know, like, why do we need this? But at the same time, it provides access to a whole new audience that wasn't going to open a Coinbase account. They weren't going to go to a custodian and invest directly. However, it did another thing too, was it opened the door to, oh, wow, it legitimized this asset class. So now more and more people are saying, well, what else is there? How do I invest in other things? If you look at like the ecosystem, it's so much more than something you can just stuff into an ETF. It's thousands and thousands of assets. And so that's really where I got pretty excited. And the financial advisors that come to us are most excited is there's a whole world here.
Yeah.
So that's
while you were talking about the empowerment of, I was thinking, because I'm coming from my former employer, I worked at Link2. They are a tech-enabled investment platform that has created an opportunity for accredited investors and actually non-accredited investors as of late to invest into pre-IPO opportunities. But where I'm getting at is the power of special purpose vehicles, SPVs. Do you see SPVs impacting or having an impact like ETFs had on the market?
Yeah, I think so. When you think about the SPV, it's like a legal wrapper.
Yes.
Just like an ETF was a legal wrapper. Just in the old days, the SPDR ETF is S&P depository receipt. So basically, you deposit your S&P with me, State Street, and I'll give you a receipt. And then when you want those 500 companies back, you give me the receipt back, and I'll give you the 500 companies back. So that was the first ever real tokenized, to speak of, a tokenized fund.
Yeah.
And now we're just seeing more and more of this. So when you look at all these little SPVs, if I could just wrap up some SpaceX into an SPV and then tokenize it and then offer it to investors, it opens a whole new audience of investors that can now own a piece of SpaceX, where before that was like CalPERS and a few pension funds and some venture investors. So it really does democratize this entire universe of investing.
Yeah.
And more companies are staying private longer. Because, and it's like, I think
why is that?
In the late 90s, so I started my career in the 90s, and what we saw was like 2000, the tech crash. So that we had the bubble and then the burst, and then a whole bunch of regulations, Sarbanes-Oxley and all these other new regulations came into place. And it made it much, much harder to go public and to stay public. We also had the world dot-com Enron blow-ups at the time. So more regulations came. So now it just became like much harder to be a public company. So you had to be much larger. And so the venture capitalists came in and said, we can fund your business. Eventually it became, there was so much money in venture capital that there was no need to go public anymore. So we saw, I think at the time there was 200-300 companies going public every year. Now there's like 150 companies going public every year. And the companies that are going public are already mega cap. I think a third of the S&P 500 is private right now. If you were to create the 500 largest companies, almost 150 of those companies are private companies. So the individual investor doesn't get exposure to that small cap that grows to a mid cap, that grows to a mega, like Intel. Intel was a public company as it made that journey. And that's a shame. But I think it's just regulation is the reason for that.
Yeah, you're absolutely right. For me, it was a wonderful opportunity being an accredited investor to then have access to be able to invest into Ripple Labs next to their backers, which for someone like me, you mentioned SpaceX. It's Elon Musk isn't just going to let anybody on his cap table. That's the power of SPVs. If you can just let that one LLC or that wrapper take position of that one representative on the cap table, but then opens it up to all the participants, that's a game changer. You were up on stage here at the Digital Fusion Summit. You mentioned and discussed about asymmetry, a lot of alpha in the industry compared to others, understanding your financial background. What did you mean by that, if you don't mind explaining briefly?
Yeah, sure. So there's a concept of alpha, and for I'm not sure about your audience, but I'm sure a lot of people understand this. But this concept of beta, which means I'm just going to invest in the market and hope I get the market. And if I don't want to outperform, I don't want to underperform. I just want to get the beta of the market. Alpha, on the other hand, is I want to outperform the market. So every 1% per year that you earn over and above, say the S&P 500, that's alpha. Alpha is really hard to get, as we know.
And, you're telling me.
And asset managers spend millions of dollars a year on analysts and the best research and satellite imagery of oil tankers to see like just how deep is the oil tanker in the water to try to estimate the earnings of Exxon. Like literally they spend millions of dollars to generate alpha, and they can barely outperform the S&P 500. When I came into the digital asset ecosystem, crypto and the like, I just saw alpha everywhere, like literally alpha donors all over the place. And I don't just mean like retail investors that don't know what they're doing. And there's that too. So there's a lot of opportunity, but really like you can trade on one exchange and you can't trade on the other, but you can, so institutions can't trade on Binance, for example. And so there's just so many different opportunities to generate and harvest that alpha in this asset class, because not everybody's here, for one. Not everybody's willing to come because they're afraid. A lot of the institutions have stayed away. But there's just a ton of opportunity for those who are willing to do it. And with that comes risk. So you have to go in eyes wide open and know that you're venturing out. You're a pioneer. But as a pioneer, you have this opportunity to harvest a lot of gold.
Wow.
And I think it's still totally early. It's like very early days.
Well, very early is what I'm hearing mostly. I know we're going to be jumping back on stage here. I was wondering if you could leave any closing thoughts about what you are thinking that we didn't discuss, maybe things we did discuss that you think would be some alpha that my audience would enjoy.
The easiest thing is if you're not in the asset class, start. So just get educated, but you don't need to be a rocket science. Like you can invest in biotech without understanding cancer immunotherapy as an example. So you can just invest in the asset class. Take 1%, 2%, 3%. I tell friends often, it's like the rule of threes. No more than 3% of your net worth, no more than 3% of your income every year, and no less than 3 years to let it sit and let it cook before you sell it, before you do anything with it. So just that simple advice would be just like get off of zero. Get allocated to the space, because you don't know. This could actually be the 10 bagger, the 20 bagger that you've always wanted to invest in, but you never had the chance to. And if it doesn't work out, that's just like a bad month in the S&P 500. It's like 3% of your portfolio is really just a bad month in the S&P. So that would be my advice, is just get off of zero.
You get off of zero, and then at the same time, when you feel engaged to participate, it's also just once you have participated, it's the toughest next part is also at the same time doing nothing.
Yes.
Because there's many narratives, you got impulse, you got a lot of emotions involved when you're deploying capital. And so that's one of the toughest things for me was just once you invest, just do nothing after that.
Just set it over there and forget it. Yeah. It really is like all of the things that we know and we're taught. You diversify, dollar cost average, don't put all your eggs in one basket, don't trade your brains out, don't do all of those things that you know you shouldn't do. But just because you've got this shiny new asset class that goes up and down every single day doesn't mean you need to do anything. Tuck it away and then look the other way.
Awesome. We're getting called off here, but Eric, it was a pleasure, sir.
Yeah, absolutely.